Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up a little, about 1%. Not huge, but not little either. You guys see S&P is about 1%. The Nasdaq did about 1 there. Russell 2000, close to 2%. But I think the star for today's move is the banks. Banks moved up. I actually think because banks actually was holding up throughout the day, leading the market, and I think banks, as the bank stocks, financial stocks, as they moved up higher, it kind of kept the overall market to be up also. Because a lot of times, you know, when it comes to like a daily fluctuations, it's mostly kind of due to fear and greed. Supply and demand. And I think as the bank stocks were holding up, and we were kind of staying in this vicinity right here. As you can see, we were kind of grinding all day. And really most of the move happened last hour of trading today, as you can see right there. But this was open. So first hour, second hour, third hour, fourth hour, fifth hour, and sixth hour. So it was consolidating pretty much all day. But I think as the bank stocks were holding up, that made kind of investors to be a little bit more like a buying mood today. And then towards the end of the day, buyers came in, brought up the market here. So let's dive in, dissect this thing, and try to figure out what we can possibly see going into tomorrow. So there were many things that I've said on the last night's video, and I actually mentioned this on last night's video, and you can go back and check on last night's video. It was about 16-minute mark. I talked about potentially throwing up first hour trap and then putting in some kind of a bullish hammer type of candle and then moving higher. Well, to be fair, I did mention that, that was a long-term moving average here. I did mention that it was going to be a rare probability. It's a possibility, but it's probably going to be rare to see something like that. And I mentioned that because we're still in my overall long-term moving average. And that's kind of what happened here. But it's funny. This market is just so good, right? I always say that this market is insidiously clever, right? I think after last night's gap down and a plunge, right? We had another island reversal yesterday, and we saw pretty much plunge throughout the day. And I think even myself, I actually thought that there's a good chance that we may come down 297, and we talked a lot about this level also, right? 297, 295, and when I shared that, I thought that something like this is a probability. It may happen, something like that, but I actually thought that was gonna be a rare occurrence, that the probability of that happening may be way lower, just because of looking at the sentiment. But this market is so good at going against the census, meaning doing the opposite of what majority people are thinking or hoping this market to do, right? I mean, just think about going back to March, late March, and then from late March, in about 2 months, a little over 2 months, we went to 320, 220 to 320, right? Market moved up 50% in a little over 2 months. I mean, that concept in itself was just crazy. I mean, if you ever tell someone that, market is going to go like 50% in a couple months, we're going to hit 320 in before the summer's over, people would probably think that you're crazy, but it happened. And I think because the majority of people did not anticipate that. And market is great at doing, the opposite. That's why I always say that market fools the majority. And that obviously looking at more of a longer term, but just looking at yesterday price action, right? After that kind of plunge, we had another island gap. There's a second island gap. And unlike some other times where we saw that, we did see this thing came down exactly at that level, my long-term moving average right here. But we didn't really see like a confident bullish move like we saw here. And we talked about that yesterday. We pretty much kind of grinded higher, or not grinded higher, but grinded sideways, as you can see here. And it showed us that, and there was a weak close, showed us that we may just break right through. And this was kind of a no man's land also. There's only support that we've had here is that my long-term moving average. But technically speaking, structurally, there's no support. Where's the support? If you thought that maybe that was a pivot right here, because there was that little swing high, then we would have been below the resistance. There was no support here. You see that? Technically, here I'll draw it straight. There was no support. Where's the support here? There's no support is here 297. There's no support. We broke below the support, important support. So this was kind of a no man's land, and not everyone's looking at my long-term moving average here, right? It was no man's land, and most people like, yeah, for sure. I mean, next support that everybody can see is 297. The support that everybody can see is 297 because that was a swing low. And I think after that plunge yesterday, probably many people wanted to see a follow through to the downside. And when the market sees that there are too many people looking for something, a lot of times it tends to do the opposite. And this is what I like to call a shenanigan to the upside, because I think most people were not anticipated this. This is the reason why I think that's why I give you those levels where, okay, long term I still want to be bullish, right? We talked about that. I still want to be bullish. We're still in the vicinity of higher lows, right? Short term is bearish. Mid term, I was saying I'm kind of leaning neutral in a hectic environment. I didn't quite want to give that neutral to bearish sentiment yet. And so this is kind of why, when you're, that's why you kind of want to understand the overall picture first, and then you kind of do your analysis based on that fact. And then you can zoom in here and try to dissect the short-term fluctuations. But it is actually very, very difficult to try to profit from a very, very short-term fluctuations. That's why I don't do day trading. I'm a position trader. So if I get in long, I tend to hold things for several months. Just so you guys know that. Anyway, so we did see a move here. I was tweeting things out this morning. This was, I think, this was a first hour, second hour, I think beginning of third hour, because I saw that my oscillator was starting to cross. You can always follow me at 2K. I'll tweet things. My charts and my oscillator, things like that throughout the day. Not throughout the day, I don't tweet all day long, but usually during the midday. And then when we saw the follow through and the next hour happened, so this was a first hour, second hour, third hour, and that's fourth hour. Once that, because obviously this is an hour, this is 65-minute chart, so every time when there's a new candle, we're gonna see the oscillator advance. So once we saw the fourth candle started, after this move, I witnessed that my oscillator just crossed back up. And I think that was it here. So if we go back, so that was right here. That's when it crossed. So once it crossed, right? Once my oscillator crossed, giving us the bullish cross signal, holding up here in this micro-term pivot, right? Micro-term pivot. There were a lot of micro-term pivot here. There was that micro-term resistance, right? And we got micro-term pivot because it was prior resistance, new support. On the fourth hour, you can see that we did see this thing coming down, retesting my long-term moving average, but closed above this pivot. I think that was important. Plus the fact that we already had my oscillator giving you that bullish cross. It's never crossed back down. And to be fair, when it crosses at the bottom of its band, And we talked about this before. When my oscillator crosses, and a lot of people have been asking me about, and you can probably go and use, I don't know, stochastic or certain oscillator. You can play around with your settings and kind of make it look like similar to mine. So anyway, so you can see when this thing crosses up, usually near the bottom of its band, right here, right? When it crosses up at the bottom of its band, right? After it has been coming down and hit that near the overbought level, right? Near the overbought level. Since the March lows, there was never a whipsaw. Whipsaw meaning like it crossed up and then like crossed back down, right? So there are a lot of oscillators that is gonna do a lot of cross ups. You know what I mean? So there are so many oscillators. You can just find certain ones that it doesn't cross back and forth too much. So you want to kind of find the right one that works for you in your trading style. But you can see here, there was never a once that thing crossed, we never saw that oscillator crossing back and forth. Once it crossed, it went all the way back up, 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 all the way back up. And this thing at least to the downtrend resistance here. That's the forecast. We are gonna go to 75 level in my oscillator. You see what I'm saying? And you say, well, this time it's gonna be different. Maybe so, because anything can happen in the stock market. However, just given the fact that every time we saw this signal, we've never seen a whipsawing. Maybe this is first time maybe happening. Yeah, maybe. But you can't never do analysis like that. We always talked about it. You always do your analysis based on the data that is at hand, that you see now. We will change our stance once I see my oscillator kind of going back down like this. If I see my oscillator coming back down, okay, well, for the first time in the 3 months period, we're seeing the oscillator whipsawing. But we talked about exact same thing here, here, here. We have not seen it yet. So we're going to do our analysis based on what we see today. But I think today's move, a lot of it has to do with that level, right? You see how there's a long lower wick, and we talked about it yesterday, that something like this could potentially happen, right? That, that potentially be that long lower wick to kind of trap the shorts and also trap longs. Why? Because maybe they went long and then they're going to place a stop just beneath that wick, right? And we talked about that. So you place your stop here or anywhere here, you got stopped out. This in the morning, because what happened? So this is where it closed. We gapped down slightly, looks like, right? So 1, 2, 3, 4, 5. So yeah, so that was a close and that was open. So we gapped down slightly. It looks like after it gapped down, we started plunging, right? I wasn't looking at this morning, so I don't know if it came down right away or later, but it doesn't matter. At one point in that first hour, we did see that candle looking like that, just bloody red. Looking like this thing is going to look like a bull flagging panic type of pattern where, you measure this and then go down to 298. And market is kind of good at that, trapping. That's why I think it's very difficult to survive in this market if you're very, very short term, like day trader, scalper. If it works out, great. But I've tried it long time ago, and I just found that it was very, because there's so many things like this happen so many times, so many traps, so many shenanigans. But anyway, so it trapped the shorts to go short, and it trapped the longs to go long. Or not longs to go long, but to get stopped out. Remember that lower wick. I want to make sure. Let's go to the cash market. Yeah, so this is a cash market. We did get below. This low here. Let's go back to Spider. Sometimes, Spider does the weird thing. So you can see it got lower, and then, it kind of rattled a lot of people. made a lot of shorts to be very excited, longs to maybe panic, got stopped out, and then it got back up, and through that not a perfect hammer candle, but what it appears to be, it does have a hammer-like characteristic. So when you see a hammer like this, you want to see at least the 50% of this candle, right? So you want to see next hour, if it's a daily chart, next day, if it's a weekly chart, next week, right? So this is an hourly chart. So next hour, you don't want price to close below the 50% of this long body, long whole thing. So you can see it from here to here, 50% goes about what? Like here, right? That's about 50%. It stayed through. It never closed below it. We finally saw that bullish engulfing candle. We pull back. Same with the bullish engulfing. When you see a bullish engulfing, you want to make sure following hour after, you don't want it to close below the 50% of its body, right? When you see a bullish engulfing. So then you can see that's about 50%. Do you agree? Right. So we stayed at, we got below it, but we never closed below that. We stayed up on the 5th hour. And I think that right there, right? So we have the hammer, and then we have the bullish engulfing. We have a little tiny bull flagging type of pattern, not able to close below the 50% of its body. On top of that, we have the oscillator, right? Oscillator condoning, affirming this bullish move, because after that, because we saw that cross right here. And despite the fact that it declined on the 4th hour, 5th hour, it continued to separate like that. And then on the last hour, when it finally broke out, that's when you saw the advancement and continued separation of these two, right? So a lot, I mean, and so just going back, a lot has happened now, because you can see my long-term moving average here. And what did I say yesterday? One day is not going to establish a trend. And as I was demonstrating that if the bears really want to bring this thing down, they must focus on developing a downtrend. And one day is not going to cut it. Same with the bulls. We did see a bounce, and that's a very, very positive signal that we did see a bounce there. Not some, you know what I mean? Like we held it. Bears did protect, bulls did protect this level. And it's important because just looking at the performance from here, right? We did see a pretty nice bounce from that level prior to that. And so, but we need to follow through. But at the same time, you can see my midterm moving average still slightly declining, right? So last time when it was kind of slightly declining, there's some trouble there. So I'm going to give you this level right here. I'm going to give you two levels now. I'm going to move these guys up. Okay, I'm going to move these guys up. So I give you 305, 303. 305 is a level where there's a breakout level. And you can see my short-term moving average. My short-term moving average. The price is now above my short-term moving. You guys remember last time? That's my short-term moving average, that squiggly line. We broke above it, and then what happened next hour? We came down, retested it. There's a chance this thing come down tomorrow morning and retest my short-term moving average before going higher. And that's why 305 is important, because 305 is the breakout level coinciding with my short-term moving average, right? My mid-term moving average hanging around at 308, and then we got the gap area at 310. So this level, that level is going to act as resistance. So right now, we do have higher low cultivation that needs a follow through. And we're also dealing with lower highs also. And we still have both of these island top reversal gaps still open. So This is how I'm going to label it today. Long term, obviously, and I said this yesterday, the day before, long term is still bullish. Long term, I'm bullish. Midterm, despite the move that we saw today, I'm still gonna label it, I'm still gonna categorize this market in the midterm neutral. Neutral slash hectic environment. Neutral slash hectic environment. Short term, however, we are above my short-term moving average. Normal circumstance, normal circumstances, when I see my short-term moving average price staying above it, I'm definitely going to give it a bullish sentiment, right? Normal circumstances. But we're not in a normal circumstance, right? Because we're already dealing with this downtrend resistance here. We got a couple, that down gap, that bearish island top reversal gaps. We did get above my short-term moving average. We've done that here. We've done that here. We've done that here. It's been pretty choppy, pretty lethargic. It's been in a hectic situation. So I'm giving it, despite the fact that we do have the price staying above my short-term moving average, I'm categorizing today short-term neutral to bearish. Neutral to bearish. Remember yesterday I was bearish in the short term. So it did get improved a little bit, but still neutral to bearish in the short term, neutral to hectic environment in the midterm, bullish in the long term. Does it make sense? So I'm going to assume at this point, unless we saw some whipsawing happening in my oscillator, that this thing is getting ready to go to 75 reading on my oscillator, which is that falling resistance there. We saw something like that happening before. And you can see right there, that was a cross, and that was back in April 22nd. We got up, we pulled back, and finally broke that curse, broke that resistance there. So maybe something like that, we have to follow up on and see what happens. If we do see, let's say if we do see this thing going up, pulling back, and then getting back up to about, the overbought level, you're going to see this thing going up, fill this gap, hit that resistance, somewhere around here, pull back, hit that my midterm moving average like that, and then get up and fill this gap. So if we do see something like that happening, we'll that will be the best case scenario for the buyers, to see something like this happening, right? For bears, obviously, I would have to say overall sentiment is kind of still a little bit bearish. Overall sentiment, just because what we're seeing here. Overall sentiment, bulls still has to work a lot. And yesterday I mentioned that it won't be too easy for the bears. Remember I talked about that on the last night's video, that it won't be that easy. Buyers gonna try to any kind of weakness that you show, you know what I'm saying? Buyers are trying to get out there and trying to buy that dip because we're in a long-term bullish environment. And that's kind of what we saw today. But I think overall sentiment, though, we're still dealing with these downtrend and some island top reversal gaps. So I think bulls also going to struggle. That's why I'm giving it neutral to hectic sentiment in the midterm. So I think the moving average and the gap area there, it's not going to be easy. What I'm saying is it's not going to be easy. It's going to be, I think the choppiness is going to continue. So bulls got something to work with here. Looks like there's a good chance this thing will get up and they'll get this price to get to the, 311 or so. If I forecast just looking at this, but 310 is resistance and 308 is resistance, my midterm moving average there. Remember last time that did that, and then that made it pull back a little bit. So those are the things I'm working with. You can follow me at 2K Kim on Twitter and StockTwits. I will tweet things out tomorrow, give you guys an update on the price section, on the moving average and the gap, and what's happening with my oscillator. You want, if you're a buyer here, you want to see this oscillator continue to thrive to the upside. If you're a bear, hopefully, you see for the first time, it never happened this entire rally since the March lows. We've never seen this in whipsawing. Usually whipsaw happens if we're on a longer term bearish downtrend. When you're in a bearish downtrend, you see that it was ugly here. You see that right there, just a lot of ugliness. Why? Because there was bearish downtrend. What happened in a plunge? Remember what happened in March, early March, late April plunge? You see how there are a lot of whipsaws happen here, up and down, up and down. That would happen in a longer term bearish downtrend. But in a longer term bullish uptrend, once you do see the cross, they usually get back up. But if you're a bear, you don't want to see that. You want to see this thing somehow whipsawing back down if you need to see this thing coming back down. So those are the things that I will kind of mention. I'll tweet things out tomorrow, probably during the midday or so. We'll go from there, right? So you guys enjoy your evening and good luck trading tomorrow.